morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The country's debt load rises as the BSP reports the Philippines' external debt burden hits $17.16 billion in 2024. Moody's rating says the Philippines can survive the escalating U.S. tariff war, crediting its domestic-led economy and small trade surplus. And in Gaza, the death toll from Israeli strikes breaches 50,000, deepening concerns over the humanitarian crisis there. First, let's take a look at how financial markets performed overnight. U.S. stocks ended nearly flat on Friday, bouncing back from earlier losses after comments from President Donald Trump sparked hope that the tariffs set to take effect in early April may be less severe than initially feared.
The market today sold off quite a bit earlier at the open. That was in response to a couple of weak earnings reports, particularly from Nike and FedEx. And I think the report there was similar to what we've heard from quite a few other companies, and that is that while the numbers today are not so bad, there is some uncertainty, quite a bit of economic uncertainty for the rest of the year, and that seems to be what the market is focused on at the moment. We're lacking some visibility on what the back half of the year is going to look like, and some of that caution is why stocks have been trading lower throughout most of the year.
The Dow Jones Industrial Average and the S&P 500 were higher, flat with a slight upward bias, up by 0.1% each, and the Nasdaq was in the green as well, higher by 0.5%. Over in Europe, the FTSE 100 lower by 0.6%, Germany's DAX lower by 0.5%, and France's CAC 40 down by 0.6%. Here at home, the Philippines' external debt service burden climbed sharply in 2024, reflecting the country's continued struggle with pandemic-era loans and a high global interest rate environment. That's according to the latest data from the Bangko Sentral ng Pilipinas. The total debt service burden, or the combined cost of paying interest and principal on foreign loans, rose to $17.2 billion last year. That's 15.6% higher than the $14.9 billion recorded in 2023. The BSP says this covers payments on fixed, medium, and long-term credits, among others. RCBC's chief economist, Michael Ricafort, notes that the rise stems from past pandemic-related borrowings, as well as globally elevated interest rates that have remained high since 2022. Experts say that the growing burden highlights the need for prudent debt management, especially as developing economies like the Philippines face headwinds from a strong dollar, tight global financial conditions, and looming repayments in the years ahead. The Philippine government's gross borrowings edged higher in January as the state continues to raise funds for its spending programs and debt obligations. Data from the Bureau of Treasury shows gross borrowings reached 213.1 billion pesos in January, up nearly 5% from 203.2 billion pesos in the same month last year. The increase was driven by a nearly 8% jump in domestic borrowings, which rose to 152.2 billion pesos from 141.5 billion pesos in January of 2024. Domestic debt made up over 70% of the total, reflecting the government's strategy to reduce exposure to foreign exchange risks. Higher borrowings remain a key tool for funding infrastructure and social services, but analysts say managing debt sustainably will be crucial amid rising interest costs and a challenging fiscal outlook. The intensified geopolitical tensions and shifting U.S. trade policies may weigh on Asia-Pacific exports, but the Philippines is expected to be more resilient than many of its regional peers. That's according to a new outlook from Moody's ratings. Moody's warned that no Asia-Pacific economy is completely shielded from the impact of escalating U.S. trade policies, which could weaken global demand and put pressure on export-led growth. But the credit ratings agency says that the Philippines, along with India and Indonesia, is likely to cope better thanks to its domestically driven economy. Moody's also noted that the Philippines and Indonesia face less risk of additional tariffs due to their smaller trade surpluses and deepening defense ties with the United States. U.S. President Donald Trump recently escalated trade tensions, hiking tariffs on China to 20% from 10% in February. He also imposed 25% tariffs on steel and aluminum imports and slapped additional duties on goods from Mexico and Canada, including 10% tariffs on energy products and 25% on other imports. For the Philippines, a country less exposed to global supply chains than its neighbors, the broader challenge now lies in sustaining domestic demand while remaining strategic amid shifting global power dynamics. Philippine banana exporters are sounding the alarm, warning that the country could lose its status as Japan's top banana supplier amid rising regional competition. The Filipino Banana Growers and Exporters Association, or PBGEA, says that the competitive pressure is growing, with lower tariffs favoring exporters like Vietnam, a member of the Japan-led Comprehensive and Progressive Trans-Pacific Partnership. The Philippines, by contrast, is not part of that trade pact. PBGEA warns that Vietnamese bananas will enjoy zero tariffs in Japan by 2028, further boosting their competitiveness. Vietnam already overtakes the Philippines in China's banana market thanks to stronger output, lower prices, and growing political tensions between Manila and Beijing. Exporters say without strategic policy support and trade access, the country risks losing critical ground in its long dominant Asian markets. Foreign investors converge in Beijing this week as China steps up its push to restore business confidence at a time when geopolitical tensions and trade uncertainty continue to cast a shadow over global markets. The high-profile forum draws big names in global business, including Apple CEO Tim Cook and Qualcomm's Cristiano Amon and Saudi Aramco's Chief Amin Nasser. Also in attendance, U.S. Senator Steve Daines, who urged countries to keep markets open amid rising volatility. China's policymakers are looking to boost domestic consumption and stem capital outflows as new U.S. tariffs and pressure to trade and investment. But fewer U.S. CEOs are present this year, underscoring the strained relationship between Washington and Beijing. For the Philippines, this is a development worth watching. With multinational companies re-evaluating China's strategies, economists say Southeast Asia, including the Philippines, stands to gain from supply chain diversification and investment direction. Business leaders say this is a crucial window for the country to strengthen trade ties, improve ease of doing business, and position itself as a viable alternative in the shifting global landscape. President Ferdinand Marcos Jr. personally inspects a near-complete segment of the Cavite-Laguna Expressway, a major infrastructure project aimed at decongesting traffic in southern Luzon. The president toured subsection 3 in General Trias City alongside executives from Metro Pacific Tollways Corporation, the infrastructure arm of businessman Manny Pangilinan. The Cavite-Laguna Expressway, or CALAX, is targeted to be fully operational by the third quarter of 2025. Once completed, the Cavite segment alone is expected to cut travel time between Cavitex and the South Luzon Expressway by as much as 45 minutes. The project, part of the government's Build Better More agenda, is seen to boost economic activity, logistics efficiency, and property values across the Cavite-Laguna growth corridor. On another front, Philex Mining Corporation is in talks with a foreign investor to sell a minority stake in Silangan Mindanao Mining Corporation, the company behind the Silangan Copper Gold Project in Surigao del Norte. That's according to Philex chairman and ultra-bilyonaryo Manuel Pangilinan, who says Philex will retain majority control of the venture while raising additional funding to move the project forward. The Silangan project is expected to start operations by early 2026. Its first phase will focus on the Boyongan deposit, which holds an estimated 81 million tons of mineable material. Industry stakeholders see the Silangan project as a potential game changer in reviving the country's mining sector and boosting exports of strategic metals amid rising global demand for copper and gold. Motorists can get ready to pay more at the pump. Local oil prices are headed for an uptick this week, snapping a 3-week streak of rollbacks. Industry estimates point to a possible increase of up to 1 peso per liter for gasoline. Diesel prices could rise by as much as 50 centavos per liter, while kerosene may go up by 30 centavos. The expected hike is being blamed on heightened geopolitical tensions in the Middle East, which have pushed global oil prices higher in the recent days. Official price adjustments from local fuel firms will take effect on Tuesday, with consumers urged to top up ahead of the increase. The North Luzon Expressway Corporation is suspending tolls on its northbound lanes from Balintawak to Maykawayan, just as Holy Week travel is about to pick up. The toll waiver takes effect at noon today and will remain in place until all 4 lanes are fully opened. The move follows damage to the Marilao Interchange Bridge last week after it was struck by a truck, closing 2 lanes and causing traffic buildup. Repairs are ongoing and expected to be completed by the end of March. With Holy Week travel expected to ramp up, the temporary toll suspension aims to ease congestion and offer relief to northbound motorists and commuters alike. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Back. The International Criminal Court orders both the prosecution and the defense to start submitting evidence in the case against former President Rodrigo Duterte, marking a key step in its investigation into alleged crimes against humanity. The prosecution has until April 4th to submit information including the total number of documents, witness statements, and requests for protective measures for potential witnesses. The Duterte camp must respond by April 14th, outlining whether they intend to present evidence or call their own witnesses during the confirmation hearing. Duterte's next ICC appearance is set for September as the court decides whether to move forward with a full trial. For the Philippines, the case raises questions about rule of law, accountability, and how the country is perceived on the global stage, at a time when foreign investors and international partners are increasingly looking for stability and strong institutions in emerging markets. Now, class suspensions and commuter disruptions hit Metro Manila today as transport group Manibela stages a strike, raising concerns over mobility, productivity, and the pace of the government's transport modernization push. The strike protests that Manibela claims are inaccurate figures used in implementing the Public Utility Vehicle Modernization Program, a key policy that aims to phase out traditional jeepneys in favor of modern units. In response, several universities have suspended classes, among them Mapua University's Makati and Intramuros campuses for senior high school. Classes in all levels are canceled in Adamson University, Colegio de San Juan de Letran, and De La Salle University, Far Eastern University, Pamantasan ng Lungsod ng Maynila, and the University of Santo Tomas. Transport Secretary Vince Dizon has ordered the deployment of additional buses and trains, while the MMDA is rolling out free rides to minimize disruptions. For the business sector, the strike underscores the continuing fragility of urban mobility systems in the capital. It also highlights the need for cleaner transition plans as the transport modernization program advances to avoid operational disruptions that could impact workforce, commuting, school operations, and supply chain timeliness. We're taking a short break. Business 360 will be right back. Welcome back. An Israeli airstrike hit Nasser Hospital in southern Gaza over the weekend, killing at least 5 and injuring several others. The strike targeted a Hamas militant in Khan Yunis. Hamas-affiliated media claims it killed political bureau member Ismail Barhoum. The Palestinian death toll has now breached 50,000. The escalating unrest adds to global geopolitical risk, with potential implications for energy prices, trade routes, and investor sentiment across emerging markets, including the Philippines. On another front, Canadian Prime Minister Mark Carney calls a snap election for April 28th, seeking a stronger mandate amid escalating trade tensions with the United States. Carney says he needs clear public support to address the impact of U.S. President Donald Trump's new tariffs, which he warns could pose a serious threat to Canada's economy. The next election was initially scheduled for October 20, but a surge in poll numbers for the Liberal Party following Trudeau's resignation and Trump's escalations has given Carney a window to move early. For global markets, the snap election adds uncertainty to North American trade relations, with potential ripple effects on supply chains, energy exports, and investor sentiment across key economies, including the Philippines.
I've just requested that the Governor-General dissolve Parliament and call an election for April 28th. And she has agreed. We are facing the most significant crisis of our lifetimes because of President Trump's unjustified trade actions and his threats to our sovereignty. Our response must be to build a strong economy and a more secure Canada. President Trump claims that Canada isn't a real country. He wants to break us so America can own us. We will not let that happen. We're over the shock of the betrayal, but we should never forget the lessons. We have to look out for ourselves. We have to look out for each other.
Good news from Vatican City. Pope Francis is released from the hospital after a 5-week stay for double pneumonia, his longest and most serious illness in 12 years as pontiff. The 87-year-old Pope made his first public appearance in over a month, stepping out on the balcony of Rome's Gemelli Hospital to greet hundreds of well-wishers. He then visited a nearby basilica to pray before returning to Santa Marta, in the Vatican, where he lives. Doctors say that the Pope will need at least 2 months of rest to fully recover, but he remains in stable condition. As Holy Week approaches, a time of deep reflection for Catholics around the world, Pope Francis's recovery offers hope and renewal. And that's it for Business 360. I'm Maiki Oreta. Keep it here on BNC, the Bilyonaryo News Channel.